What's up, guys? PJ checking in. So the trading day is over. It is now 5:17. I got out of my trading day around 11:15, and I just don't like to keep trading after these hours because around 11:30 the market slows down a lot, and then yes, you can still catch a few opportunities depending on the day, but I like to just have the rest of my day to enjoy and do something else. And so, two of my friends came here, and we had this trading morning together. Everyone was trading, and then we went downtown Montreal. Now, I want to just review a couple of trade. That was kind of a great day. Like it's been 3 days in a row that I had wins. Um, and I have a new rule that I'm going to implement as much as I can, but I think it's going to be something I can actually really easily do. And the rule is like don't like after 3 trades, that's it. Like whether it's like winning trade or losing trade, just fucking get out and don't. You can still I can still look at the market, but I will stop trading after. Whoa, what's that actually? I will stop trading after 3 trades, because I mean the more trade you get in, like it can drain a bit of energy and your emotions and psychology and like everything. So um the next trade you take after three, and for you maybe it's going to be five, maybe it's going to be 10, maybe it's going to be 50, I don't know, but for me I think for now, at least with the level of experience and expertise I have and understanding, I wouldn't go above 3 trades for now. Jumping here, I just want to talk about what happened right here for those who might be wondering. This is the SNDK, but basically, Micron Technology had the earning today, and it was better than expected, and the stock went 20% after market, which is crazy, and it just made many other memory name go up as well, and the ETF DRAM went up, of course, obviously. So this is why there's a massive spike. Now it's not because the earnings were better than expected that the stock would have went up. It's probably most likely that the stock will go like crazy, especially with memory name, but it could have dropped as well. So it's a bit like uh, I wouldn't say gamble, but almost a gamble. So, anyways, today a couple of trades. I think I took 4 trades today, um, and 3 of them were only paper trade, and one of them was also taken on well sample. And see, only losing trade was taken with well sample. So I'm glad I just put $100 in it. SNDK. Did I take a trade with SNDK? Not at all. I will come back to SNDK because there's something I wanted to check with it. But anyway, let's go to WDC. I took a trade with this one, and it was a long. So here we have the 5-minute opening range, and this one is the 15-minute opening range. I usually don't really do this, but I wanted to try and see how the price would react. And as you can see, it's respecting this 15-minute range. So I think it's a good thing to at least mark it out and have more potential entries, and not only focusing on the 5-minute time frame as well. So I was looking at this. In the beginning of the day, we were like, "Whoa, what is happening with the stock?" And it was ranging, and then also always watching the QQQ at the same time. Let's put this right here just so that I can see what was happening at the same time. So yeah, so I got in I was waiting for a potential entry. So either a break and retest of the 5-minute, or a reclaim of the 5-minute, and also the previous day low. We don't see it much, but there's this previous day low right here. So it was either like a reclaim of that or like maintain above and like a break and retest of the previous day high. It had multiple zones, and I don't know how to necessarily like where to position my trade, because it could have broke above the 5-minute, but then you have the support and resistance right here, and you have like the previous day high that is not too far. And one thing I didn't mark But anyway, time when they are really like, let's say the previous day high, the pre-market high, and the 5 minute opening range is so close one to another. This is where I'm still confused of, should I wait for the 5 minute or the pre-market or the previous day high? I'm not quite sure about it. So we'll see over time. But I've waited. It went underneath the 5 minute. It broke. It reclaimed and broke again above, and retested underneath. So I wasn't quite sure to enter here. I wasn't quite sure if that would be considered as an engulfing. But let's take a box and see if it would have been a potential entry. Well, let's say you enter right here. You put this stop loss right there for a 0.80%, and you want to have, I don't know, like a been a winning trade. Now, one thing to look here is that it's underneath the VWAP. It is also underneath one of the SMA, which is the SMA 20, but it's above the SMA 9. Now, here, exactly here, it's starting to like wanting to go back, but it doesn't mean it will. So if we look at the QQQ exactly right here, here it was a big red candle testing the previous day low on the Q, and right here was a big green candle, but I wouldn't consider it as necessarily as an engulfing. It's not even engulfing on the Q. So it was a riskier trade, but still a winning trade if you're just looking for a 2-hour multiple. But it doesn't mean it would have went to this level, because there's the previous day low, and it could just have stopped right here, which is another place you could have put your stop target. So yeah, it would have turned out to be probably a better trade than the one I ended up taking, which is right here. So I think this one was maybe a bit more riskier when you think about the 5 minute. It tested the 15 minute, then it went up, it broke above the 5 minute, and this retest it's a retest, but there's not a lot of displacement right here. Then I saw the hammer candle, and I was like, okay, right here, the Q is also doing an hammer candle on a support and resistance level. So basically, it was coming from down to it's the resistance level. So it's like, okay, let's get in that trade. But I took the trade a bit late, honestly. It would have been much better to get in the trade right here with a stop loss just at this level. I don't know if that's the best level to put the stop loss, but that's a 0.4%, and with a 2-hour multiple, it would have been 0.8% of gain. But in this case, you can easily target the previous day low, and it would have been 1.1% for a 2.7 hour multiple, and potentially you could have raised this just to this level right here. But anyway, I got into trade a bit late. I got into trade right here, and I've put my stop loss right here. I think I put this because of this box right here. I think it would have been much safer to, not safer, but a good idea to put this right to the bottom of the previous day low, but I haven't. So anyways, it's still a winning trade, so I will not that, and down and down and down. The earnings of technology got out. Then another trade I got in is Micron Technology. The first one was a winning trade, and the second one was a losing trade. Now, I think this the second one, but then when I took the second trade with Micron Technology, it was my fourth trade, and this is where I'm like, okay, maybe like if you have 3 winning trades in a row, why not just keep watching the market, the stock market, or just go away? Like, why taking more trades? Like, yes, I could have gotten into 1, 2, 3 more trades and have winning trades, but I'm not doing this to necessarily like come into the day and be like, okay, today I'm going to do more money. And it's not really about that. Yes, making money, awesome, but I'm just really passionate about the stock market. I'm not trying to become a millionaire. If I become a millionaire, wow, amazing. It's just that I like to do this, and for me, it's a great career choice for now in my life. So three winning trade in a day and you make like, I don't know, 0.5 or 1% or 1.5%, it's really good. So that's one of the lesson, at least for me. I want to put that rule and see how it's gonna unfold in the future. So my trade, I got in the trade right here, and I got out of the trade multiple places. Right here, I wasn't sure about this one with these big wick and bullish candle or bearish candle, but I still waited for another uh, take profit right here. So I got in the trade around this level. So it was like, let's just take the ruler. Got right in here, and the first was taken out after 0.6%, which is still good. And it was about at 1-ish 95%, which is good as well. The reason I got in this trade was probably because of that candle right here. It I want to speak too fast. So the stock went down and it broke underneath the previous day low. It reclaimed it, retested, and for me, even if here it would have been a good trade in terms of percentages you could have made, this is not an entry for me. That's a bearish candle, so I wouldn't have gotten in here. And the Q, it was a big bearish candle as well, so I was not feeling confident right here. It went up, it broke above, it reclaimed the 5-minute, tested the 5-minute, and then went back down again. Up, went down again, and underneath the previous day low, reclaim, and then wait, I'm forgetting this one. Yeah, it went here, and then it tested the previous day low, and this is why with that candle I got in, and also the Q, yeah, the Q had also break and retest one key level that I had, I support supply and demand zone. So I had more confidence in that trade, like not a 9 out of 10, but this is something I forgot is also I want to ask myself on a scale of 1 to 10 how confident am I with the trade, which is going to help me decide on position sizing. So that's pretty much it. And then, okay, after that, I saw another opportunity to trade. It was right here. So, to be honest, oh yeah, the reason I got in that trade is because of this right here. This is a morning star. Now, the thing with that morning star is it's not above a key level. It broke down, it came back, reclaim, but it's not going to retest the previous day low. It's not going to retest the 5 and 15-minute range. No. Yes, it's technically pretty similar to a morning star, but that doesn't mean anything at all. There's still this level that has a lot of strength. So I got in that trade, and yes, it was like the SMA 9 SMA was going up, but the 20 SMA was pretty flat, and it was under the VWAP. So it's not always like these indicators are not always to be taken as certainty, but it's confluence. Now, if I look at the Q right here, the Q was also testing a key level, and it was a hammer candle, which for me was some confirmation that the price would go. However, between this zone, like this support and resistance zone, what's happening with my graph? Anyways, with this support and resistance zone, what I didn't see and take into consideration is that there's a huge supply and demand zone that has been tested many times before. And so, yes, it could have broke above, which it did maybe 10 or 15 minutes later, but it was not above. So I mean, this could have worked, but I think a better entry would have been like if that morning star would have been above this key level. So I got in the trade right here. I put my stop loss right here at the bottom of this wick, and as you can see, it doesn't go pretty far. And I got out, yes, late, much later than I would have normally, because one of my rules is to wait for candle close before. So yes, here would have been my stop loss, but the candle could have went there and went back up before the candle closed. That happened all the time. So I didn't want to be taken out of the trade. So yes, I have lost more on that trade than I would have liked. If I got in here and I got out here is zero point 0.9. So I don't know exactly, we don't see it exactly where it was, but around that level. So it's almost break even with Micron Technology today, which I mean, it's better than being at loss. But as I said, I had 3 winning trade today. So, I mean, really, like, I'm not at this stage in my life. It's not about having more. It's like, I don't know, guys. I mean, you might not have it, which is perfectly fine and normal. But yeah, that's pretty much it for my trades today.